Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On tonight's show, I catch up with Adam Dawes of Shaw and Partners, and I ask him about what he thinks is going to happen on the stock market in 2024. I ask him for his best lithium stock, the tech company that might do well, whether the big miners are still a buy, and also the banks. And I talk to him about, or ask him about his best tip for 2024, the best stock that he really likes. His 2023 was actually a ripper. I don't like praising Adam more than he needs to be praised, but it was a good one, and I will talk to him and you about that. And then Paul Rickard and I look at dividend stocks that could do well with interest rates coming down. Remember, interest rates are very good for term deposits, but when term deposit rates come down, then we go looking for the really good dividend paying stocks. Paul and I look at that. That's a show. Let's kick off now with Adam Dawes of Shaw and Partners. Thanks for joining us, Adam.
Yeah, great to be here, Peter. Thanks.
It's our first for the year, so let's just have a look at your 2024 crystal ball. What do you think is going to happen to stocks? A nice, solid, positive year for Australian stocks?
I think so. I think we've got to be a little bit optimistic here, don't we? But yeah, look, certainly interest rates potentially in the US starting to talk about coming down. We've certainly got inflation somewhat tamed. And so, you know, that's fine. And really, at the end of the day, I think markets are looking pretty good, especially just out of the blocks. And January wasn't a bad month also. So I think the market's probably priced in one interest rate cut at the moment. So I think if that interest rate cut takes a little bit longer than expected, we might have a little bit of trouble. But at the moment, things are looking good for 2024.
Yeah, if you look at what the Yanks have done, the Yanks have bought on the possibility of an interest rate cut, even before they thought about March, and even though they're pushing it back. How about on Friday night, mate? A fantastic job report, so many jobs, unemployment didn't rise, and the NASDAQ was up 1.74%.
I know.
Like, the world has changed from 2022 to 2023, hasn't it?
Yeah, it sure has, and it really does show you that, or how resilient I think this US market is, and the consumer potentially, as well as those AI stocks, all doing very, very well. Apple had a little bit of a softer report on the quarterly, but yeah, look, all of it wasn't too bad.
Okay, let's go to the sectors that look attractive for you this year. What do you reckon?
Yeah, so I'm looking at a fair few sectors. One of the ones is coming up into our reporting season is going to be the REITs. I think they are looking pretty good with a discount to NTA at the moment. Energy sector looks pretty good. Origin got a bit of an upgrade from UBS the other day. So I think they lifted their price target to 960. So yeah, I think something like that looks okay in the energy. Consumer discretionary, I guess it's still in favour or out of favour, but look, Harvey Norman, JB Hi-Fi are absolutely killing it. Some of those smaller ones, Universal, UNI, in that teenage space, I think is looking pretty good as well. So, yeah, there's a couple of sectors to keep an eye on.
Okay, on the subject of REITs, what is your favourite REIT for this year? And I don't want to say Goodman, because Goodman's is the easiest one to pick. But
is there any? Is there any others?
No, is there an office block REIT that you're comfortable with, or do they all worry you a little bit?
Yeah, office block I'd be a little bit cautious on. Look, there's a little one, Abacus Storage King, that just that sort of Abacus delisted or yeah, so something like that, I think is actually not too bad. They're $1.15 or something like that. I mean, it was $1.41 IPO, so you know, there's a bit of value there, I guess. Dexus probably looks okay, but yeah, I'd be still away from the office side of things.
Okay, we'll keep monitoring it over the year, and probably halfway through the year you might change your attitude. But let's just see. Interest rate interest rate cuts will help them for sure. Lithium, definitely. Is there a lithium stock you like above all the rest? We know they've been all smashed. We all know lots of them are good companies that probably, when everyone's driving EVs, and of course Chris Bowen's trying to get all of us into EVs as soon as possible, lithium miners will do well. Which one do you like the best?
I think you're going to go with two of them, which is IGO and PLS, only because they are the lowest cost producers in the market.
Yeah.
IGO, hands down, is the cheapest with their Greenbushes operation. So I think you'd be in when prices for lithium are so low and potentially could go lower from here. You definitely want to be in those producers that aren't the marginal producers, or it's going to cost them money to produce a ton or a pound. I think, yeah, that's where I think you've got to be looking. So IGO and PLS still got a lot of shorts on it. Hasn't been wrong, those shorts. So they're still happy there. I just think that's probably where you need to be, those two.
So for those that don't know, PLS is Pilbara Minerals, and it is regarded as probably one of the best in the sector. Mate, tech stocks, a lot of the great tech companies have already taken off. Is there still some value with some of the tech companies that haven't been, at this point in time, re-loved? You know, like Xero has been, NextDC has been, Megaport has, Ordinate already has. Is there anyone... WiseTech, of course. Is there anyone left that's worth having a nibble at on the basis that interest rates will come down?
Yeah, I think you were right with WiseTech. I think that's probably a good start to be looking. I think that's that's obviously come off from its highs now, started to move a little bit sideways now. So it actually looks pretty good. I can't really find much in the tech space that hasn't already run. That's the problem. I'd probably take some profits in Megaport. I think last time they made this announcement, the stock got up to this level and then came right back down again. So I think, if you had some profit in Megaport, the only one this one has done very, very well, but only got told to me the other day from a very well renowned broker at Shaw's. He said DUG, Doug, is an amazing business. It's a cloud-based high-performance computing business. So basically, they take data optimizations and make it easier for companies to obviously use that data. So basically, supercomputers. This one is actually looking really good. It has run a fair bit, but I don't own stock, and I got to do a lot more work on it. But I think something like that is probably not too bad in the tech space. It's probably a little bit less known in the market.
Let's come back to that in 2 weeks' time when you've had a bit of time to do some homework. I know you're a slow homework doer, but that's because you're so busy entertaining the crowd. Okay, you have. Big miners, yes or no? BHP, Rio, Fortescue.
Yeah, I think yes. You have to. You don't have to have some in the portfolio. I don't mind Rio though. I mean, okay, big miners, it all's predicated on the iron ore price. What's going to happen with the iron ore price? It
and
looks
China.
defied. Yeah, well, yeah. I think overall, Rio doesn't look too bad. Doing a bit of work on Rio with their capex cycle, and they're looking at basically spending another a $6.2 billion in Simandou, which is in Guinea in West Africa. That's supposed to be in the next 2 years producing around 80 million tons of iron ore. So yeah, it's going to be a big one. And I think something like a Rio for that sort of next leg up probably doesn't look too bad.
Okay, the banks, have they really run, and you don't have to buy them here, or is there a bank worth buying at these levels?
So no to Suncorp. I think you get out of Suncorp. I think the ACCC is going to knock that ANZ thing on the head. I think there's potentially that could see some further consolidation. So I think you'd be out of Suncorp. I think Macquarie's now starting to look like it's getting some legs over 190 now. We've been talking about it for ages, saying anything under 180, buy it. Anything under 180. So now I think Macquarie's actually starting to really sort of rebound as well. So yeah, they'd be the two. I know you want me to say one of the big fours, but I just don't think at the moment.
No, I've recently put some of my clients out of some of the big four banks on the basis that there's other companies are going to have more upside this year than them. But if their share price drops, sure, I come back to them. Now, I want the AD Destroyer, the Adam Dawes Destroyer for 2024. And I'm going to ask you, what was your best call last year? But that comes last. The Destroyer for this year, the one that's going to really do well for people who believe in Adam Dawes of Shaw and Partners.
Well, there's not too much pressure there. Thank you. Peter, for that intro. Look, one of the ones that I saw the other day, and it's probably a 2-year story, but it's looking pretty good, is NextGen. NXG. It's a uranium, potentially a uranium producer. This end of February, they're looking to basically finalize their license for the mining in Canada, which is basically some of the best uranium, in fact, the best uranium deposit you've ever seen. Cameco is pulling out sort of 0.5 grades. These guys are pulling out 20 and 50% grades. Like it's amazing.
Yeah.
NextGen is a dual listed one, so that I think that is interesting. There's not a lot of volume here on the Australian Stock Exchange, but Cameco runs out of Cigar Lake at 2028. Guess who comes into production in 2028? And that's NextGen. And so if Cameco want to keep their mines and uranium running, just like Newmont did with Newcrest, I think this one looks like an interesting one, because Cameco will let them do all the hard work, get all the preparation, get all the permits, do it all, and then basically come on in when it's a lay down. So hang on, I didn't say that was going to happen. That is my speculation.
A lay down was there. No, you didn't say that.
Yeah, I should never say that. I will retract all of
that.
But
this is not advice anyway. This is just your best shot at financial education. That's all it is.
So yeah, NextGen, NXG is the stock code.
Okay. So what do you reckon was your best call last year?
Sandfire didn't go too badly.
Sandfire.
Yeah. I think I'm not too sure what was up. I think a couple of percent. So I think that one was a good one.
Sandfire from October of 22 to the end of until recently was up about 114%. So it was even if you mentioned it early in 2023, it still had a big rise. So that was a good call.
Thank you.
And it's probably the first time I've ever really praised you to the hilt. But you can also see that I followed you and invested in Sandfire as well.
Well, there you go. Well done. I don't want to know what the worst one is. We don't have that, do we? So that's good. Perfect. Let's stick on the high notes.
One day when I want to tease you, I will go back to your worst call. Great to see you, mate. Adam Dawes of Shaw and Partners.
Thank you.
And that was Adam Dawes of Shaw and Partners. If you want to see the whole show, which includes myself and Paul Rickard talking about some of the best dividend-paying stocks that we should be chasing in 2024, you do have to be a subscriber to the Switzer Report. Go to switzerreport.com.au.